Hello, good morning, Mark, and good morning, everyone that dialed in on this beautiful Monday. Today, we invited Mark to speak about the topic of flexibility, but specifically in the context of energy suppliers, utilities, and the partnership or the contracts they might have with industrial players and how they can work around this and progress on that topic. Mark, maybe it's a good idea that you first introduce yourself a bit, your background, and your affinity with the topic.
Great, of course. Yeah, well, thanks for having me, Thomas. Good to be on the webinar. So currently a partner at Carney, based out of our London office. Carney is a global strategy consultancy. A big part of the work we do is with our energy and process industries clients, and that's where I focus. And prior to joining Carney, I've got a background in the energy industry. So a strategy director over at Centrica, which is one of the big UK and Irish utilities, also with a footprint in Europe as well. And I've always been quite close to the topic of, energy transition, and particularly behind the meter on the consumer side, but also the industrial side, and how we can take advantage of the new assets that are being deployed behind the meter, the new digital platforms, such as the one that you've developed to create better outcomes for the energy system. And in that regard, also for utilities and industrials. So, great topic for us to discuss today.
Okay, cool. To the audience, well, as usual, we prepared a couple of questions to discuss with Mark for approximately 20 minutes. But of course, it's the idea that you share some questions as well. This can be done in the questions or in the chat section that you'll find on the bottom right of the webinar window. So don't hesitate to post any questions, and we'll be on the lookout for them. But maybe Mark, let's start with an easy one for you. This whole topic of flexibility. It's much about like a relation between the grid, the utility, industrial companies. This relationship between utilities and industrial companies. How have you seen it evolving, particularly with the recent energy crisis, the renewables uptake? So what's driving the big changes there, and what are those changes?
Yeah, I mean, it's been a really interesting few years in the energy industry. That's to say something, isn't it? And I think there are a few things over the last kind of 5 years that I would call out. I mean, three key things, right? So, with the COVID pandemic, we started to see the utilities' traditional role as a risk manager really, start to shift. Right, we saw massive drop off in demand and a real shift. Particularly into the kind of the consumer demand for power versus industrial and commercial. And that really started to cause those kind of initial, I guess, concerns that the traditional way that they were managing, the volume risk on their contracts was not where it needed to be going forwards. Fast forward, then we obviously had the Ukraine crisis, the massive spike on power prices and the volatility that drove as well, which, put further strain on that utility role to manage risk, volume and price risk. And, we saw a number of, more traditional B2B suppliers fail during that period because they simply weren't sufficiently collateralized to manage that risk. And frankly, that, the way they were managing that risk had kind of not kept up with the amount of exposure they were at. Mm-hmm, mm-hmm. And now, with renewables now as well, I mean, that's probably the third thing to call out. So both, in front of the meter and behind the meter now in some European countries, we've got significant levels of solar PV coming on. You've got that increased canyoning effect in the price curves, rapid growth in number of negative price hours in many markets across the year. So you've got utilities really having to struggle to manage the shaping and the sourcing for their customers, increasingly of many of whom who have generation and potentially storage on their own sites. So, challenging time for utilities to manage those shifting volume risks, those shifting price risks. And I think what we saw is utilities trying to offload a lot of that and push that risk back onto their industrial and commercial customers through stricter volume corridors, through stricter know your customer when they were thinking about taking on new customers, to basically try and manage down that risk rather than, and I think we'll come on to this, solve it collaboratively. I think at the same time, we saw corporates react as well, right? So it's no surprise that we've seen really rapid growth in the PPA market over the last few years as corporates have tried to really take control of their energy procurement. So locking in for longer periods of time with a product that's become increasingly something they can understand, and feel comfortable navigating. And also at the same time, that's helping them with a lot of their kind of decarbonisation agenda and credentials as well, right? So corporates have shifted. They've kind of increasingly viewing utilities with a bit of skepticism. What value are they providing me if they're not providing me risk management? Utilities have shifted, increasingly thinking about how can we minimise risk rather than solve it. And I think, that leads us to a place today where for industrials that want to kind of more actively shape their energy procurement and also their decarbonisation agenda, and for utilities that want to serve the industrial and commercial customers of tomorrow, there's a real opportunity to shift how they contract, shift the services they provide, and actually unlock a lot of value that's currently being trapped.
Yeah. You mentioned some of those suppliers went belly up and attributed some to not having sufficient collateral, which is, that's it's not necessarily easy to solve, but it's at least like if you have more collateral, you can take in more losses, of course, on the trading side of things. But you mentioned as well there's some fundamental shifts required in the way of working. Now, if they transfer that sort of risk balance increasingly towards the consumer, like they don't have often direct market access, but the same concept of having some collateral for certain trading or hedging losses, having other ways of working that need to come in. It's, of course, an argument that plays on the consumer side as well. And you mentioned already PPAs as an increasingly popular mechanism. We try to work a lot on the topic of demand side management. How do you see securing your own supply in a more direct bilateral approach and then taking more control behind the meter? How do you see these things changing or working for industrials?
Yeah. So I think it's evolving in real time, which is why it's so interesting. So you've got certain customers, they were maybe particularly hit by the surge in power and gas prices because they were particularly exposed. Energy was a really large part of their cost of goods sold. Maybe they also had the scale to really invest in bringing in some energy procurement experience inside. They're the players you've seen move first. So I'm thinking steel, cement, food manufacturing businesses, those kind of really quite energy intensive businesses. I think what you see though is it's a very fragmented picture in terms of who's had the capability and being able to invest to, for example, take some of their sourcing into their own control by, say, bringing an energy efficiency consultant in, bringing an experienced energy sourcing expert into their team that can manage direct market access, or has had the capital to be able to invest in on-site solar storage, IoT integration for the manufacturing plant to enable them to take advantage of some of the demand shifting that they can do. I think the opportunity to bring that to a much broader set of customers that maybe dealt in the last few years with it as a cost and a crisis to manage through, rather than something to invest in for the future in terms of rethinking fundamentally how they interact with the market and what that can do for their the carbon in their product or in their supply chains is kind of coming now. And I think it's a great opportunity, particularly when you think about, in some countries around Europe, where things like if you're a business that's growing and you're on a grid constrained site, actually more demand side management and behind the meter generation storage is probably the cheapest and quickest route that you can go down to solve for your growth challenge. So I think it's it's shaping as we speak, basically.
Now, and this is in the end all about risk balance and who takes risks and who pays for the risk. We see many industrials taking, indeed, there's two approaches you can take. You can say, indeed, I develop the capability myself to do so, and I invest indeed in assets, in skills in my team, and in these this sort of expertise and set of capabilities. You also have the ones that say, like, I'm producing cars. Energy is not my business. So if I have capex and it's already a difficult market, I rather spend it on sort of assets which have a more sort of direct impact on producing cars, rather than on the whole utilities side of things. And there you see a whole set of propositions around, yeah, energy service companies, but might open some doors as well for, again, after the period of skepticism, open some further and maybe deeper collaboration again between utilities and the real energy companies and some production companies. And, well, the utilities benefit as well from this sort of more flexibility and ability to absorb some risk on the behind the meter on the consumption. And how do you see these two, like the utilities and the industrials, coming together again around these topics?
Yeah, well, I fundamentally do believe there's value in the utility model, and like primarily, it has to solve for this kind of risk management. And if ever there was a need for that, it's today. I think you're spot on, Thomas. Right? If you're a bakery, if you're manufacturing cement or steel or cars, you need to be focused on your end customers and your products, not focusing on on energy procurement, despite the fact that it's a really material cost line in your production. And I think that's where the opportunity for the utilities comes in, right? Because in the footprint that they have, customer book, assets, and the capabilities they can put behind customer optimization, be it platform, data, analytics, they should be able to solve for it and create value across that value chain and across that customer book that an individual business cannot, an
Yeah.
individual customer cannot, right? I think what they struggle with is, they are managing a pretty painful transition in many cases themselves, right? So they're having to move, in many cases, particularly for the integrated utilities, they're still struggling to move, large amounts of capital deployment to build out new form of, generation, non-thermal generation. They're struggling to compete in traded markets with startup energy trading businesses that are stealing their lunch on prop and spec trading. They're struggling to retain customers and serve them in a profitable way on aging technology stacks. So, they've got a set of challenges which has made it difficult for them probably to get the right propositions in the hands of end industrial and commercial customers. They've also just been managing for the day-to-day, I think. And I think, this is an opportunity now to stand back. There's been some consolidation in the market. There's a period of some stability in the market. The trends are now very clear in terms of where the market's heading. To think about, how can we step back into that role? What are the services we can offer to our end customers? Is it analytics? Is it management of the assets on site? Is it funding to get some of those assets on site? And that's very much, when I think back to where I started in 2017 with Centrica, that was the thesis there. It was about, behind the meter and at the customer. That is where the value is. If we can help customers manage that risk, manage that transition, through the decarbonisation of their operations, there is value in that, both the transition and the decarbonisation, and then the management of the risk.
Mm-hmm. Yeah, because indeed, for these industrials, it's a more theoretical point, but a utility has such a big portfolio typically that it would be weird that they cannot do it, at least that they cannot generate a benefit that I could do on my own. I mean, they have a whole portfolio and trading layer they could do additional optimization with. And if we work together on that and they share some of those benefits with me back as a customer, I might be very open to work together on this. Where,
Yeah.
I mean, now you see, like, again, two pathways. You see the whole residential area, and there I believe really utilities will win by making a very integrated, frictionless proposition, going from the hardware all the way to the contracts and the steering of that hardware. But in industry, it's maybe a bit more of a patchwork where separate data analytics propositions might live next to third-party hardware investment, but it might not be a sort of one size fits all for the CNI segment. They might have to be a bit more modular there. Or how would you think about an ideal offering related to CNI customers for utility?
Yeah, I mean, I agree. It's much more patchwork on the INC side, and if you think about even just the channel to the INC customer, traditionally the commodity contract or the PPA through one route of procurement, on-site energy services, energy efficiency through another. So, you as a platform, as a utility, you have to actually find the one point to talk to at the customer, or convince them that it needs to be thought of as one procurement decision. I think you're spot on in terms of the value of the utility portfolio, particularly if they can build that understanding behind the meter. So at the moment, I think where they really struggle is, and where they were really exposed during the last few years, were they did not understand their customers' demand profile as well as they needed to. But the technology and the solutions are there to do that now. And actually, that is joint value to solve for. So with the deployment of the right software and technology layer, and then sharing some of the benefit around the reduced cost of shaping, the reduced risk, and then some of the portfolio benefits into the utilities book, I think that is the kind of the recipe for success. There's clearly value there. I think the proposition is difficult, right? Because you have customers coming at it from really different positions. Some have gone early on site generation. Some have gone early and large on long-term PPAs for large parts of their supply. So you're not attacking a greenfield in many cases. You're attacking a complex web of procurement decisions, legacy decisions, and you have to be able to kind of cut through that. So I think modular in your offer, clear value case for the end customer, and ideally, anything that makes it as quick to kind of proof of concept and show the value, be it on a site or in another way, is really valuable.
Mm-hmm.
The reality. Sorry, I was just going to say that the reality is there's value here for the utility as well, in terms of they've been facing in many markets. The UK is a classic example of this. Lots of disintermediation through brokers and channels that have just been driving it into a price-based discussion. This is the opportunity to shift the contracting discussion into one that's based around long-term value, decarbonisation, flip the frame, and generate a lot of customer retention benefits off the back of that.
Mm-hmm. Because indeed, there's lots of focus on the price discussion, but now with the whole energy transition, it seems that you always need to very carefully tune three objectives, I think, which are around cost efficiency, like pricing, just not paying too much for electricity. There's for many companies also something about price and cost predictability and stability. Publicly listed companies, for instance, that need to sort of have their shareholders in the know a bit in advance about what the costs are going to be. And then you have the whole sustainability discussion around securing green power. And in some industries like green hydrogen, data centers, definitely also in grid capacity constrained locations, you increasingly see that this is really not just an SBTI target somewhere in a sustainability report. It's like you need to prove it that you have secured additional local green power, or you're not selling your stuff, or you're not going to get connected to the grid. And so that's also something I think a utility can play a role in. But
I agree. This has got, just to build on that, this has got very real in the last few years. It isn't just a reporting exercise anymore. It's fundamental for a lot of these businesses to the employee proposition, the customer proposition. And I think, you mentioned data centers, you mentioned some other, high energy consuming groups in there that are really leading on this, where, increasingly as we want to shift to more hour by hour or minute by minute matching of those demand profiles with renewables, again, the role for a utility versus that utility being disintermediated by just a PPA directly with the generator becomes more and more important, because you need that sophistication to be able to do that kind of that minute by minute or that hour by hour kind of product for the end customer.
Mm-hmm. But well, I received a question in the chat around the topic of electrification as well, which was something we didn't really talk about yet. But if you're talking about minute by the minute, like go to any food manufacturer, for instance, that's used to run like gas-based frying, baking, drying processes. Well, you had price stability, you had process stability. If you then electrify that, and if you just like run on electricity as you're used to running on gas, you end up with higher costs in most countries, due to just spark gap. Now, who needs to educate the consumer on this? Like, is it also a role that can be done by the utility? Like how to go about these fluctuating electricity prices and this whole minute by the minute, hour by the hour world, compared to, oh, this is my monthly price for the month.
Yeah, I mean, I think this is the real challenge, right? Because yeah, as you say, we've got two trends going on at the same time. We've got kind of we've got the electrification of processes that were traditionally not electrified, combined with the need to decarbonize and provide some stability in the source of power as well, and that's bringing increased volatility into the power markets. So, I think what doesn't work, in my experience, is starting with the view that you need to rip up the operating manual. You need to work in a completely different way. So there needs to be a way that the value case is really clear from the minute the industrial consumer takes that decision to shift the capital, make the capital investment to electrify. And they need to be thinking from that point really, or before that point, about how they get procure.
I wanted to interrupt you because we see many companies like think I need to make a business case, then I have an FID and I will deploy the capex, and then I'll start thinking about steering but we see that the business cases fail because there's no notion of, yeah, but then I have hourly prices, and how will it be in 15 years from now, and what. So we see many of these cases being stalled or cancelled, and effectively it's because of a limited understanding of how the electricity markets work.
Yeah, and so you bring that decision further forward in the process, and here is one of those challenges. Like I said earlier, those two buying decisions have typically been different, dislocated decisions. The decision to invest in new plant and equipment or on-site generation, and how we procure our commodity supply. So, there is an educational role for a utility to provide, which is, making the case, showing how to build a positive business case, showing that, yes, there's a capex investment up front, but actually over the course of the lifetime of the run, it's actually the power supply on the way in that is the big determinant of whether the business case is going to fly. Those are the things you can model, and you can, it's really valuable into that process for the end customer.
Mm-hmm, mm-hmm. Yeah. Maybe in the end, the utilities will go back to be able to provide stable prices if they know a lot about the flexibility behind the meter, how it can be deployed, how it will be deployed. But I mean, when I speak to utilities, I always flag it as one of their big risks. Like now they all suffer from imbalances due to increased renewable generation. That's sort of their headache right now. But if they miss the boat or the opportunity to know when their customers and how and due to which incentives they're going to activate flexibility, this will be even exponentially more difficult, I think, than predicting whether the sun's going to shine or not.
Yeah, because what you don't want to do is you don't want to end up with such a thin slice of the value, and also be left with all of that risk around imbalance.
Yeah.
Right. So they need to create a way to still have, the value on, the baseload power, the PPA, some value downstream, ideally in the electrification or the kind of the service layer that's coming on top. And then I think it becomes easier to manage some of the rest, because it's part, the overall value is larger, and the relative part of the relative size of the imbalance and the imbalance cost is smaller. I think they have to get behind the meter and understand the customer demand better. I mean, that's got to be part of the answer, and that's such a huge value for both sides, to do that. And the data advantage it gives the utility arguably is outsized versus the end customer as well, right? So there is probably a step that the utilities can take to make that more upfront and clear in their proposition they're putting forward to the customer, make the benefits really clear. Are there opportunities where they can invest first for the customer, split the benefits in a different way? I think those are some of the models we might see.
Yeah. It's another question I got from the chat, but there's people from multiple countries in the call. You spoke about UK market being quite a brokerage heavy, price based market, which I mean is known in Belgium on the large industrial side. It's a bit less. Germany a bit less broker, but lots of energy advisory though. How do you see different regions and yeah, around this topic? Like, are there particularly interesting regions? Are there regions where this shouldn't be a big topic yet? What's your take on that?
Yeah, I mean, it's a great question. I mean, even for, if I step back for a second, despite interconnectedness, the utilities market and the power market is also just very country by country and regional in its specificity, particularly when you get to the customer interface. How are you going to contract? How are you going to do business? So even for those that kind of where their customers cross borders, and whereas the utility or the service provider you cross borders, it's been very difficult traditionally to serve in a consistent way across countries. So I think, it starts with, at the customer site, at the customer's location, knowing that customer.
Mm-hmm.
I think there are certain markets where this is more attractive first, right? So I think about where intermittent renewable load on the grid is highest, where the canyon curve or the duck curve is greatest, and where there's the most grid constraint. So, the markets that I think are very interesting for this, it's Netherlands and Belgium, so Benelux. I think some of the Nordic countries, Denmark, for example, very interesting as well. UK, I find very interesting. Again, because there's a lot of constraint around some of the industrial and commercial centres. Data centres, classic example, very constrained at the moment. And I would have to say Germany too. So I think we're going to see a lot of innovation coming out of the UK, the Benelux. I think Germany will be fast following on adopting. And I think the kind of players in this market are looking to develop platformizable solutions that can deploy across markets, even if they start in one country or one jurisdiction first.
Yeah. Small question that triggered by what you just said, like, do you arbitrate between like supply side flexibility? You didn't mention like Norway, Sweden. There's lots of supply flexible hydro, of course. Like, if you're a utility operating in a country that has such flexible generation capacity, does this matter? Like, or is this even a topic, or should I just continue to tweak my hydro based on whatever the customers demand at any point in time?
It's a great question. I mean, I think this is going to come first to countries where we're more supply side flex constrained more quickly. Yeah. But the reality is the system needs more flex than we have, and the growth of flex on both sides is going to be critical. I think whoever can kind of get there first, supply side, demand side, it's going to be a mix of both. There's value to be captured. So I think demand side has always been tough to do. But I think we've got the tools now with data, with the software platforms, and with the fact that there's a lot of investment in the IoT and OT on the customer side to actually really push the demand side more than we have. And I've always viewed that it's been an untapped resource.
Yeah. Thinking about previous procurement exercises on energy I've done, like, this is all about demand versus supply power as well. So if I'm a consumer, I might be more interested in generating some demand side flex, just to be able to have something to throw on the table when negotiating a deal, and to take some of that risk off the table and just manage it myself, for me, very cheaply, which might then return into better contracts, which with a lower pricing, just not on a small layer, but just on my total commodity demand, which can translate into huge savings. All
Agree.
right, Mark, I think we're at the end of the half an hour. It was a super interesting discussion, and a discussion that we'll continue to have also in our event next month in London, where we'll invite some people on a face-to-face meeting there. I'm looking forward to that, and hopefully we get some interesting guests over there as well.
Perfect. Thomas, thanks for having me today. Great discussion, great topic. Look forward to discussing it more soon.
Thank you. All right. Bye-bye, everyone. Thanks for attending. Bye, Mark.